So this video is brought to you by Wealth Dreams Lifestyle Incorporated. I just wanted to show you all a few things. So again, a lot of people are very curious about the stock market, don't do much. I'm waiting on a call from a place to for hiring for a job. And I hadn't received it yet, but I'm still working, still trying to obtain some income, some wealth, trying to make something happen. So I want to show you all exactly what I'm doing on this day while waiting on the call that I most likely may not get today. So here, yesterday I put a short. So you have call and you have puts. A call is pretty much a educated bet that a stock price will go up. A put is an educated assumption that a stock price will go down. You can put this in at any time, and your expiration date is how long you have until you have to exercise, no matter if it went up or down. Obviously, if it does the opposite of what you wanted it to do, you're going to lose money. So your expiration date is that final day that you have to hold it and hope or want it to go your way. Okay? So yesterday, and you usually want to do it on earnings. If you do it randomly, it's an even bigger chance that it won't go the way you want. So you do it on earnings. Each quarter, companies report earnings, which is the expectations that the company is expected to do. And analysts provide those expectations. And Red Hat, a company called Red Hat Incorporated, which is a technology, software, and programming company. When I work at car dealerships, we use a software that we keep all our customers in, and that would be, their field. We didn't use them. We use CRM, which is owned by Salesforce, I believe, but that's what they do. I was betting that the stock would go down because the market has been very, very volatile as of late. It's been very volatile, regardless if companies beat earnings or not. As you can see here today, the NASDAQ plunged 2% negative for 2015, and it is September right now, the end of September, and we're negative for the year now. So again, the market's been really crazy. As I told you in one of my last videos, it's very important to know why. But I mean, it can be rational or irrational because people make up the market, buyers and sellers, just people, us. But again, it's been very crazy. As you can see, this is the day after Red Hat reported. It's the day after, okay? And their stock price is down. And they actually did really good. So I use a couple different places to do my research. And I mean, it's really not complicated. It's just trying. So this is the chart. I'll go to news. Actually, let's see if I can do snapshot now. Yeah. So this again, Red Hat Inc. I actually wasn't familiar with the company, but through technical analysis, you can analyze any company as thousands. So that's why people make money every day. So again, yesterday, all right. So yesterday they reported, okay, revenue of 442 million, up 13% year over year. Cash flow of 120, and this is second quarter earnings, of 120 million, up 12% year over year. The world's leading provider of open source solutions. So they beat on revenue, but it did say that their billings was low, meaning this company pretty much gets, say, dealerships or doctors, whoever used their services, their technology to keep all their customer base or whatnot. Um, they beat on revenue, meaning how much money they're getting. That's not considering profit, what's actually theirs, and taking costs into consideration. But and I want to keep this simple. But their billings, they were off on their billings. Their meaning how many people are giving them money. Their expectations weren't as high, so it could be speculation that it's not growing as fast as they want. Now, again, yesterday I put in a put, meaning I betted that the stock would go down even after earnings, regardless how well they did, because the market's just been crazy. So I put in a October 15th. That's the third week of October. It will expire. Okay, and each day you lose a portion of the value um, as the days go by. 70, meaning it's at 71. When I bought it, it was at 72. It was at 72, and I was betting that it would go below 70. Okay, and the put means it's going to go down. And right now I'm still holding it. It is down, but it's not, where I need to be in order to make a profit. So right here you can see calls bet people who bet it to go up, and puts people who bet it to go down. And right now people are paying more for it to go up than people are for it to go down. So people still think it's gonna go up, which it showed in the past. If you look at the charts, and this is just for today, so it went up today at the beginning, and then it's been under pressure. This is a volume, and this is just saying if it's overbought, and just different analysis. It's the moving average. When these two lines cross is when the stock price is going to go the opposite way. So as you can see, this here is showing volatility on the averaging towards the sell side. People are selling more, okay? And obviously, they're not selling all at the same time, but overall, the volatility here overall was selling. And then when this line crosses, when these two lines meet, is usually when you get the flip side. See how it went up right here? So it crossed right here, then flip, it crossed right there, and there's probably a little flip. I know it's still on the same side. And then right here, cross, and then you got the buying, overall buying, and cross right here. See how it flips. This is buying, the average is more people buying, the average is more people selling. And all you have to do is analyze these indicators, and it will help you get a better idea. So this is a 1 day. I'm gonna go back to a year. So the year it's been trending up. The last time they reported first quarter, it goes right here, and it went up. Okay, it went up. Yeah, right here. It's right here. It went up above 80, and then it dropped. Okay, and they had a really good quarter last quarter. So again, I have a put set on it right now. I'm just sitting on it, and I will show you where it is at the moment. So right now it is right here. Friday, October 15th, 70 put that I put in yesterday. And this is the price right now is 71.76. Oh, I only bought one. I didn't have much. The average price right now that it's selling at is $2.13. Obviously, it's a portion of the price. So options is what this is, and it's not the same as just buying common stock. It's like you're buying a derivative of that common stock. Not to go over your head, don't worry about that. But the price right now is $1.55. Okay. The average price that I bought it at was $2.13. Right now it's going for $1.55. Okay, I bought $58. When you initially buy, you lose. You're not in a credit situation, but if it goes your way, then that number, that wealth, will turn your way. So you can just sit on it. I have 3 weeks: October first week October, second week, and then the 15th, which is the third week of each month is when they expire. I'm gonna sit on it for a little while longer. Only lost $58 right now. I lost $58 right now, so I'm gonna sit on a little while longer because this market has been it's been pretty crazy. So we'll see what it does. And if it does tend to go my way, meaning if this stock, I bet for it to go under 70, so that's when I'll turn into profit. If this stock goes to 69, 68, 68, this will turn into probably be around $400, $500. But it has to go to 68, and they had a pretty good quarter. So we'll see how it goes. But I just wanted to do a short video and show you all the basics, and it's just opening an account and actually doing it. That's it. I don't even have much money in this brokerage account right here. Look, I don't even have much. But I just want to show you all how you can obtain wealth in other ways. Even if you don't have a job or anything, you know, your mind should always be thinking to do something, thinking to make something happen. So that's what I'm doing. I'm just exercising, but we'll see how it goes. So let's see where it's at right now. I could just refresh that page, but I'm going to use CNBC, and you can use different. So it says 71.50. Here, look, it was at 71.76. So I just had refreshed. And then the 15-minute increments is when these stock prices update. See, and this is showing 71.79, but this one is accurate. Just CNBC, and I figured that out by playing with it. So eventually, this one will catch up to this one. Options Express will catch up to CNBC's. You got 71.50. There you go. Goes the other way. So maybe Options Express is a little faster. See, I'm always learning. Because actually, I was comparing it to E-Trade. So yeah. But again, people are buying constantly around the entire universe or Earth. People are buying constantly, so this price is constantly going to fluctuate. And again, we'll see what happens. Today, if you look at the charts, again, it went up and it's been under pressure. It went up to $73 at the beginning of the day. And they reported last night. And then right now it's been kind of under pressure. It is trying to hold. When I first started the video, it was overbought. Now they're saying that it's oversold. But not much volatility in the stock. How far apart these lines are is going to tell you how much volatility, meaning how many people are buying, how many people are selling, all that, obviously at one time. So as you can see how far, this is a lot of volatility. This is when it first opened, the market first opened after earnings report. Now the market has been open, so people that wanted to sell sold, people that wanted to buy bought. Look, it hadn't been much volatility at all, so it's moving. It is, even in a bad market, it is trying to go up. So we'll see what happens. Hopefully, if it doesn't go my way, I don't hold too long, which is what I unfortunately I usually do. So it's a mistake, and it's just being wise. It's not the last trade, so we'll see how it goes. I'm gonna hit it again one more time. And I just want to show you all how stock prices do fluctuate. They're going to fluctuate. I'm gonna use CNBC. See where it's at now. Oh, went up a little bit more. 71.83. So we'll see how it goes. Again, this video is sponsored by Wealth Dreams Lifestyle Incorporated.